Hey everyone, so you're thinking about adding Meta to your portfolio. Big decision, right? Well, we've done a deep dive for you, using financial reports, market analysis from Morningstar, even checked out Wikipedia for some background and The Motley Fool for a breakdown of what Meta actually owns these days. By the end of this, you'll have all you need to make a smart choice, I promise.
It's definitely a hot topic. I mean, you're talking about the world's seventh most valuable company, market cap of 1.449 trillion USD, and they own three of the top four social media platforms.
Facebook, Instagram, WhatsApp, massive.
Yeah, no kidding. And get this, just last month, Instagram was the most downloaded app globally, 54 million downloads. So they're not slowing down anytime soon.
True. But it's not just about size, right?
Mm-hmm.
What's the secret sauce behind Meta's success?
Well, their family of apps business model is a big part of it. They've built these interconnected platforms. People spend a ton of time on them. And that massive user base, that's where the revenue comes from, mainly through advertising.
So basically, the more users they have,
Yeah.
the more attractive they are to advertisers. Is that it?
Pretty much. And it's been working really well for them. In 2023 alone, 98% of Meta's revenue came from ads. We're talking 134.9 billion USD.
Wow, that's huge. But what happens if advertising slows down? That could really hit them hard, couldn't it?
Oh, absolutely. It's a definite risk to think about. But Meta isn't just sitting on their laurels. They're making some big moves into the metaverse with Reality Labs. VR headsets like the Meta Quest 3, virtual worlds, think Horizon Worlds, and they're pouring money into AI research.
Metaverse, AI. Sounds risky, especially with those Reality Labs losses we keep hearing about. Is this a sign of trouble? Or just part of the process?
Yeah, it's true. Reality Labs saw their revenue drop and operating losses in both 2022 and 2023. But Meta seems to see these technologies as the future, a long-term play. Whether it pays off is the big question.
It's like they're balancing this giant money-making machine with these potentially revolutionary but currently money-losing ventures.
Yeah, it's a tough balancing act and makes predicting Meta's future even more challenging.
So we got these virtual worlds, the AI push. What about acquisitions? They haven't been shy about those in the past.
Right, think Instagram, WhatsApp, Oculus VR. Hugely successful, but there have been bumps in the road too, like that whole Giphy situation recently.
Right. Wasn't that because of anti-competitive concerns? All that scrutiny on big tech buying up the competition?
You got it. Regulatory challenges are a huge factor. Antitrust regulators are watching Meta very closely, making it harder to pull off those big acquisitions.
So even with all that cash, they might not be able to just buy whatever they want.
Exactly. They got to play the regulatory game carefully. It'll be crucial for their growth strategy moving forward.
Okay, so let's recap. We've got Meta, huge in social media, powerful ad-driven business model, but there are risks. Advertising might slow down. Regulators are breathing down their necks.
Yeah, that about sums it up. They're trying to balance all that with these ambitious but currently unprofitable investments. Metaverse, AI. And they're facing limitations on those big acquisitions they love so much. Definitely a lot to consider if you're thinking about investing.
A lot to unpack for sure. But before we jump into what you specifically need to think about before investing in Meta, let's dig a little deeper into some of their recent moves. What are they eyeing up right now?
Well, the rumor mill's buzzing. Apparently, they're looking at gaming companies like Roblox or Epic Games, maybe to boost their presence in the metaverse.
Okay, interesting.
And they're also sniffing around AI companies like Canva. Makes sense with their whole AI integration push.
So strengthening both the metaverse and AI sides of the business. But those are some big fish. What's the strategic advantage there, especially with those regulatory hurdles you mentioned?
Well, with Roblox and Epic Games, it's about tapping into those existing user bases. People who are already all in on virtual worlds. Imagine bringing them into the Meta ecosystem, connected to all their other platforms.
Right, a massive expansion of their reach in that space. In Canva, what's the thinking there?
Canva is all about user-friendly design tools, powered by AI. Integrating that into Meta's platforms could improve the user experience and maybe even open up new revenue streams related to content creation.
Makes sense. So they're looking for companies that can either bring in new users
Hmm.
or make the experience better for their current ones.
Exactly. And that strategy, it really highlights the importance of looking at why they acquire companies, not just what they buy. It gives you a glimpse into their vision for the future.
All right, so we've got the past acquisitions, potential future targets,
Yeah.
the regulatory landscape.
Okay.
But what does all this mean for someone thinking about investing in Meta? What do they need to think about before taking the plunge?
That's the million-dollar question. But before we dive into that, it's crucial to understand Meta's position in the bigger picture. They're not just a social media company anymore. They want to be a major player in the future of tech.
Right. It's not just about what they are now, it's about what they could become.
Precisely. And that potential, that's what makes Meta such a fascinating and challenging investment. So think about your own portfolio for a second. What are you aiming for? What are your investment goals? How much risk can you handle? And how diverse is your portfolio already?
Yeah, those are the basics for any investment, right?
Yeah.
But how does all that apply to a tech stock like Meta specifically?
Well, Meta's a growth stock. They're investing a ton in innovation, trying to grow big time, which means you've got higher potential returns, but also more volatility, more risk if you want steady income. You might want to look at companies with solid dividend histories instead.
So Meta might not be the best for someone looking for that regular dividend paycheck.
You got it. And because they're so focused on growth, they might not prioritize share buybacks either. Those can boost stock prices. But they can also mean a company's not finding other good investment opportunities.
Okay, so growth over dividends and buybacks. Got it. But what about the risk? How risky is Meta, really?
Well, it's definitely riskier than, say, a well-established blue-chip company. We've already talked about the potential advertising slowdowns, the regulatory hurdles, and all the uncertainty around their metaverse investments.
True. Those are big question marks. But isn't there risk tied to their advertising reliance, too? What if people just start using social media less? Or privacy regulations make it harder to target ads effectively?
Bingo! You've hit a nerve there. Their core business, the one raking in billions. It's vulnerable to changes in user behavior, to privacy regulations, even to the overall economy.
Even though they're a giant now, there's no guarantee they'll stay that way.
Precisely. That's why it's so important to understand a company's fundamentals and how those fundamentals could change. It's just as important as understanding their potential for innovation.
So size and past success, they don't equal a guaranteed safe bet for the future.
Exactly. And with Meta specifically, I'd really encourage you to dig into their financial performance, look for trends in their advertising revenue, how their recent acquisitions are performing, and their growth projections, especially for Reality Labs.
But don't just look at the big picture. Get into the nitty-gritty numbers.
Yes, exactly. Look at their profitability, their debt, how they're using their capital. Are they making smart investments? Are those investments paying off? These are the key questions to ask.
Okay, so we've talked about the basics of investing, the risks with Meta, the importance of their financials. But there's more, right? What about those ESG factors you mentioned earlier?
You're right. Environmental, social, and governance. These are becoming more and more important for investors, especially those who want their investments to align with their values.
Can you break that down for us? How do those ESG factors relate to Meta?
Sure, environmentally, you might look at their energy use and their efforts to reduce their carbon footprint, especially with those massive data centers.
So basically, how green are they?
Yeah, pretty much. Then, socially, you'd look at their impact on things like data privacy, content moderation, the spread of misinformation. They've definitely faced a lot of heat in these areas.
Oh yeah, I've seen the headlines. So if someone's really concerned about that stuff, they need to do some digging into Meta's policies and their track record.
Absolutely. And finally, governance. This is about things like board diversity, executive compensation, transparency in their decision-making.
So it's about how ethically and responsibly they operate? Wow, that's a lot to consider. On top of everything else.
It is. But for many investors, these ESG factors are non-negotiable. Their investments have to reflect their values, even if it means potentially lower returns.
So where does all this leave us with Meta? They've got this huge reach, they're pushing boundaries with innovation, but they're also facing some serious challenges and ethical questions.
Exactly. And at the end of the day, the decision to invest in Meta, it comes down to your own goals, your risk tolerance, and yeah, your values too.
Okay, listeners, we've given you a lot to think about. Before you make any decisions, do your own research. Consider your goals and how much risk you're comfortable with. And as always, stay curious.
Remember, the tech world is always changing. What if Meta's AI investments, which are already a big part of their ad targeting and content recommendations, what if those become even more important to their success than social media itself?
Whoa, that's a really interesting question. So it's not just about whether to buy Meta stock today. It's about where they might fit into the future of tech as a whole.
Exactly. That's something to ponder as you make your decision.
Okay, so we've covered a lot. The good, the bad, the potentially ugly. But are they doing anything for their investors right now? Like dividends or buying back shares? A lot of people look for that.
You're right. Shareholder return strategy. Another important piece of the puzzle. But unfortunately, Our sources don't really go into detail about their dividend policy or share buybacks. It just goes to show, even with a deep dive like this, there's always more to learn.
So true. It's just a starting point.
Exactly. You'd want to look into whether Medi pays dividends at all, how consistent they are with those payments, and compare their dividend yield to other companies. Same goes for share buybacks. Are they buying back their own stock? If so, how much and how often?
Yeah, those are important details.
For sure. It shows why you got to go beyond the headlines, really dig into the numbers, their financial performance and strategy.
All right, so we've talked about Meta's size, their success, their big bets on the metaverse and AI, the risks with advertising and regulations, how to analyze their financial performance, and even those ESG factors.
A lot of ground covered. It's always complex with companies this big, but hopefully, you've got a better sense of Meta now, how they operate, the challenges they face, and the potential they have for investors and for the future of tech.
Fascinating deep dive for sure. I think it shows investing is a journey, not a sprint.
Well said.
Keep learning, keep asking questions, and most importantly, keep diving deep.
Couldn't agree more.
That's it for this deep dive, folks. Thanks for joining us.
See you next time.